It's the Southern sell-off housing market reality check in the down south, in the south of the United States of America. Hello everybody, my name is John Howard. In this short video today, I am going to talk about the Southern sell-off and what's going on. Here we are. It is still summer of 2025. We are approaching the fall, and we're going to take a look at some of the data here. All right, so when we look at the data for the housing market across the South in the USA, it doesn't appear to be a light correction. It is clearly a sell-off that's been spreading for months, if not the whole year 2025, if not maybe before that, right? So let's take a look at Florida, the Florida housing reversal. Cape Coral and Fort Myers have seen prices decrease 11% over 2 years, with 7.8% of homeowners now underwater, the highest rate nationwide. Foreclosure actions are up 60% year over year, and inventory has exploded 160%. When 52% of listings undergo price cuts and homes still can't find buyers, it may officially be market correction territory. Texas, hold them down. Austin prices have decreased 23% from their peak, while builders are offering average incentives of $51,600 per house, nearly 17% of the sales price, just to move inventory. In Dallas-Fort Worth area, the active listings surged 67% year over year. When 70% of closed sales include price cuts of $5,000 or more, we may be witnessing not just an adjustment, but a sell-off. The institutional retreat. Institutional money, or Wall Street and private equity, they're fleeing fast, right? Major investors like Invitation Homes became net sellers for 3 consecutive quarters. Open Doors purchases dropped 58% from 2022 levels, while their stock hovers around $1. Billion-dollar companies with teams of analysts are retreating from markets they aggressively pursued 2 years ago. Regional distress. This isn't isolated to only Florida and Texas. North Carolina inventory surged 12.9%, while sales dropped 10.8%. South Carolina saw 16.9% inventory growth, with declining sales volume as well. Contract cancellations hit 14.3% nationwide, the highest for this traditionally busy time of the year since 2017, with Atlanta leading at nearly 20% cancellation rate. 3 warning signs. These are the critical indicators, signals, right, in market distress. Inventory growth exceeding 20% year over year. Price reduction percentages above 30% of listings. Contract cancellation rates above 50%. If you're seeing these patterns in your market, you're looking at the early stages of the sell-off, of a potential sell-off. Here's the media disconnect. While national associations forecast modest price growth and stability, over 55% of all U.S. homes for sale are concentrated in southern states, which are showing the steepest corrections. Geographic concentration of distress makes national averages meaningless for understanding really what's going on in the regions, right? The regional realities. The housing market sell-off in the South isn't coming, it's here. The question that looms is, how fast will it spread? How deep will it go? And how long will it last? As you can see, I've been doing real estate content over the last, several pieces of content. And I'm actually here in Southern California in the Los Angeles area. And as I said before, my name is John Howard, and I do videos on investing and also mostly real estate as of lately. I've actually done short and medium term furnished rentals for literally the last 2 decades. And during that time of the last 2 decades, I also launched and operated 4 different businesses that all went up to 7 figures or more per year. And I say that because, buying and operating, something like medium-term furnished rentals, or even short-term for that matter, is something that you can do alongside of a very demanding career. Fast forward to now, I'm certainly very glad that I have done that and held onto my properties. I have 2.875% 30-year fixed mortgages, portfolio of about, probably $3 million, and, have a pretty decent, average, monthly, booking revenue. It kind of averages between 10 to about 37,000 per month, which like multiple months in each year. And really, this is going back many, many years, where there's multiple months that are over 20,000 in a month for gross booking volume, which is great. So anyway, as you can see, I've been doing this content on real estate. I think what's happening now, here we are again, we're approaching the fall of 2025, and the reality is that it is finally time where some of the property values are coming down a little bit, and it might be a great time to buy. I'm here in Southern California. We'll have to see what happens with California real estate prices. I mean, for me, they're already so high here. I think that what's likely is, it seems likely to me that I'll be looking in areas other than Southern California to actually to make a purchase for like a premium short-term rental. Like, just to give you an example, I'm actually, looking in an area where I'm originally from Maryland, and I'm looking in that area. So if you like this sort of content, you can consider giving the video a like. You can also consider subscribing to the channel. Otherwise, if you know somebody that might be interested in this content, or if even you yourself are interested in getting into real estate, you'll see some links in the description. I've developed something called the SMTR Launch Kit. Very simple, very easy, and also very inexpensive. It's something you can check out those links. I also have very simple and inexpensive email coaching if you'd like to, possibly maybe speak to an expert, or have some expert insights as you launch your journey, if you decide to do that, or even if you are already on real estate. I have a feeling that from over 2 decades, I've got a lot of things I've done that can, pretty much enhance what anybody out there is already doing when it comes to actually, being an operator in the short and medium term rental space. I see it as very interesting, what's happening with the South right now, because another video I did is actually Warren Buffett and how Berkshire Hathaway just purchased about 800 million. Well, they released it in the middle to end of October. I'm sorry, not October, of August, when they did their filing, their quarterly filing, and they released that they took a $800 million position in Lennar and about a $200 million position in D.R. Horton. There can be speculation in terms of why people think that Warren Buffett did that, or Berkshire Hathaway. It seems, likely that there's a couple things going on. Number one, these builders can now sell entire neighborhoods to, Wall Street and private equity. These large groups like Invitation Homes, they're buying, as you can see in this video, they're actually kind of tapering back on some of their purchases, but that's really just kind of certain geographies, right? But they do have the ability now to buy entire neighborhoods. So these builders now have the ability to actually sell entire neighborhoods to the institutional players, which, really helps the builders. So you could say that maybe Warren Buffett sees that. He sees the value in being in the fact that these builders can now sell entire neighborhoods to Wall Street and private equity. And also, it might very well be that, Warren Buffett and Berkshire Hathaway sees it as an inflation hedge, right? So if it turns out that interest rates do go down over the next, let's say, year, and inflation, does come about again, they, the home builders might be in a very good place to actually, to invest, right? So when Warren Buffett and Berkshire Hathaway make moves, it's always good to follow them and to at least, pay attention. You might not have to invest just like them, but you can actually pay attention. So, if you have any questions about, any of this data, or anything related to medium-term rentals, or short-term rentals, go ahead and put them in the comments area. You can also, I have my other socials. You can, find me on Instagram and send me a DM, or, really just, like I said, put your question in the comments area. Other than that, I wish you a great day. And, again, thank you for watching.